Loans are one of the most widely chosen options when you need cash. When borrowing responsibly, loans can help you achieve your goals, dreams, and aspirations. However, if you're not careful, loans could be tricky and cause you significant hardship. That's why it's important to be informed before you decide to apply for a loan. In this edition of Your Money and You, I'll share some information that will help you become a smart borrower. So first, what is a loan? A loan involves two parties, the borrower and the lender. The lender provides an agreed sum of money to the borrower. Then the borrower is required to repay the lender in fixed monthly payments over an agreed period of time at a specific rate of interest. So what are the types of loans available for your personal needs? Demand loans, credit cards, overdrafts, residential mortgages, and vehicle loans. Now, these are the things a lender will consider when determining if a person qualifies for a loan. The purpose of the loan, the repayment term, the borrower's employment stability and ability to repay the loan, credit or deposit history, sometimes referred to as credit worthiness, and finally, if the borrower has any personal assets which may be offered as a security for the loan. Collateral security may vary from cash, a parcel of land, a person's primary residence, but also the bank will consider a guarantee from someone who has an established credit history. Based on a combination of these factors, the lender should be able to make a decision quickly. It is important to note that not meeting one of these requirements does not mean that a person immediately does not qualify. Remember, it's a combination of these factors. Also, loans carry different interest rates based on their characteristics. For example, with a vacation loan, you'll notice that interest rates will be higher than those of a mortgage loan. This is because vacation loans often require no security and are supported usually by the assignment of the borrower's salaries. While residential mortgages attract much lower rates because they are secured by real estate, which are often the primary residence and therefore pose less risk of default to the bank. When you are ready to apply for a personal or home loan, the documents that you are usually expected to have readily available are a recent letter of employment confirming your years of employment, your monthly salary, and if any, total allowances received. Your lender may ask you to provide 2 of the most recent pay slips also. In instances where you are self-employed, you must be able to provide evidence of your income. This can be done by providing the latest tax returns or account deposit activity. You'll also need a copy of your valid Social Security card or passport and a copy of your recent utility bill in your name as proof of address. In instances where a utility bill is not in your name, don't worry. There's a separate form that you can complete. You'll also need a quotation or documentation to support the purpose of the loan request, such as a construction estimate, invoices, and sales agreements. In the next edition of Your Money and You, we will further discuss the interview and application process.